Hello and welcome to the October edition of our London Property Market Update. I'm joining you this morning from Singapore with Marina Bay Sands just behind me. We're in the middle of our annual investor roadshow across Asia, where I've been truly heartened by the continued confidence in London's property market. Yes, there have been some challenges this year, but what's truly notable is how London's fundamentals remain solid. Long-term value stability, a robust rental sector, and sustained investor confidence. They all continue to underpin the market. Rightmove reported a modest house price growth of just 0.3% in October, which was slightly lower than in September. Although marginal, these increases indicate that prices have begun to rebound after months of corrections. There are now 9% more homes for sale across London and the southeast of England, compared with just 2% elsewhere in the UK. This increased supply has helped to hold prices. The average London home now costs around £676,000, still around 82% higher than the UK average of just £370,000. So even with a cooling market, London remains a premium destination for buyers and investors alike. Interestingly, softer prices are fueling stronger demand. Rightmove reports a 5% annual increase in sales across the capital, with nearly 60% of London homes valued above £500,000, many sellers are now watching closely for potential tax changes that could be announced in Labour's upcoming autumn budget. So, for buyers, this window of relative affordability may not last long. The Bank of England has kept its base rate steady at 4%, but analysts still expect further cuts over the next 3 to 4 months. The average 2-year fixed mortgage rate has already fallen to 4.5%, down from over 5% a year ago, saving households over £100 a month on repayments. However, inflation remains sticky at 3.8%, still well above the Bank of England's 2% target. A reminder that while borrowing is becoming easier, the broader economy is still feeling some pressure. Turning to the rental market, ONS data shows that the average rent in London now stands at just over £2,250 compared to a national average of £1,350. That's around 67% higher, reflecting London's continued status as one of the most competitive rental markets in the world. However, with more supply gradually returning to the market, rent growth is slowing slightly. At current levels, Zoopla expects rents to rise a more modest 3% for the rest of the year, following strong gains of nearly 10% at the start of 2025. Meanwhile, the number of buy-to-let mortgages issued in Q1 2025 was up 60% year on year, showing continued confidence among landlords. And as a landlord myself and investor myself, I can say with confidence, London property remains one of the most reliable ways to generate consistent rental income while building long-term capital growth. And at Benham & Reeves, our 21 London branches and our 14 overseas offices are here to help. Whether you need reliable tenants quickly or a fully managed service, So that's thank you for joining me today from fabulous Singapore. And as I always say, if you're looking to sell, buy, let, or even renew your current rental, please do get in touch so we can let you know what we can do for you. See you next month.